Stocks are rising, markets sway. Games and stocks lead the way.
Hi everyone, this is Konstantin and welcome to Gaming in Public Markets. Today we are exploring the Chinese gaming stock market, kicking off the earnings season with EA and Roblox, and taking a deep dive into Netflix's ventures into gaming, along with much more. Let's go!
China's climb, then sharp decline.
If we look at Chinese gaming stocks over the past 2 months, we notice a distinct pattern: a sharp rise in the second half of September, followed by an equally steep drop in October, almost back to previous levels. This decline mirrored the overall trend in Chinese markets, with the Shanghai Composite Index experiencing a 7% drop, marking its biggest decline since May 1997. But what caused such volatility and why was the gaming sector affected? Let's dive into the details. As I've often mentioned, the global gaming industry is a big business. It operates under the same laws as other sectors and is subject to similar economic forces. In mid-September, China's officials had a conference announcing policies to support country's domestic market, revealing extensive plans spanning across monetary and fiscal policy, as well as equity markets. While the announcement made bold promises, it lacked concrete details. Yet, the mere hint of support was enough to positively surprise investors, causing a surge in gaming stocks, with major China's gaming giants Tencent and NetEase gaining 30% within just a couple of weeks. However, in a follow-up press conference in October, officials were expected to provide specifics on policies to supplement the initial stimulus measures. Instead, they reiterated previous announcements without introducing concrete new measures. This absence of specifics disappointed investors, puncturing the stock rally that had built up after the initial September announcements. And yeah, the gaming sector was also affected. As it is the part of the market, it's certainly an intriguing situation. But what's even more interesting is its potential long-term impact. If Chinese authorities do eventually introduce specific measures, will the market react with the same enthusiasm, or has the moment passed?
Earnings roll in, stocks take flight. Big game wins in the spotlight.
The earnings season is finally here, and I'm jumping in with the latest update. First up, Electronic Arts reported net bookings of $2.1 billion, which is almost in line with expectations and represents a 14% year-over-year increase. This growth was primarily driven by a 20% rise in full game sales and a 10% increase in live services. A significant boost came from EA's American football titles, which saw their player base almost doubling. Additionally, EA Sports FC experienced growth across all platforms, with year-over-year improvements in monetization metrics. Despite this, as mentioned during EA's Investor Day, Apex Legends underperforming compared to management expectation this quarter. However, EA remains committed to revitalizing the franchise with a new monetization model to enhance its performance. Next, let's look at Roblox, which delivered impressive Q3 results. After the release, the company's stock price rose by 18%, which is quite impressive in my opinion. Roblox reported bookings of $1.1 billion, a 34% year-over-year increase, which significantly exceeded the consensus estimate of only $1 billion. This growth was fueled by a 27% rise in daily active users and a 29% increase in hours engaged. Additionally, adjusted EBITDA reached $220 million, a remarkable 177% year-over-year increase, beating the consensus estimate of $150 million.
Numbers soar, a golden time. Gaming's future looks so proud.
One of the globe's largest consulting firms, Bain, recently published a report on the gaming industry in 2024, covering player habits, distribution channels, marketing strategies, and business insights. According to Bain, the gaming industry reached an estimated $196 billion in 2023, surpassing the combined revenues of video streaming, music streaming, and cinema box office sales. Looking ahead, the industry is expected to grow at an average annual rate of 6%, reaching $257 billion by 2028. As analysts suggest, gaming has become a significant pastime, particularly among young players, with nearly 80% of players aged 2 to 18 spend around 30% of their free time gaming. Younger users also allocate a larger share of their budget to gaming. In absolute terms, however, players aged 25 to 34 lead in spending on entertainment.
Deals in motion, plans in sync, Scopoly's moving just a blink.
Deal volumes and numbers have significantly declined since 2022, but this trend might change soon. Last month, I covered Playrica's acquisition with a potential payout of up to $2 billion. And in this episode, I want to focus on Scopely's management announcement about a potential Megadeal slated for 2025. A company representative hinted at acquiring a global franchise with a potential revenue exceeding $1 billion. And this seems likely given Scopely's cash cow, Monopoly Go game, which consistently generates billions in revenue, along with financial backing from Saudi Arabia's public investment fund, the company's owner. It's interesting to see how other gaming companies will respond to that. It's quite possible that Scopely isn't the only one with such intentions. Other companies may have similar goals and plans. They're just not revealing them. At least not yet. It looks like 2025 will bring plenty of excitement to the gaming market. To keep a finger on the pulse of the game dev industry, subscribe to our channel.
Netflix gaming building fame, rising up in the gaming game.
The gaming industry is attracting immense attention for two main reasons. It captivates millions of players worldwide and holds vast potential for financial success. Over recent years, a wave of multimedia companies has ventured into gaming, each promising to deliver groundbreaking titles in the near future. Netflix, for instance, has been at the forefront of this shift, steadily expanding its gaming catalog on its platform since 2021. Initially, the lineup had only hyper-casual mobile games based on popular Netflix series, but the company's ambitions extended far beyond that. By 2024, it had released over 100 games, including simulators, action games, and remastered classic like GTA titles. But what's really interesting is that Netflix aimed to create larger, high-budget games, yet the gaming industry is notoriously complex and constantly evolving. Deep experience, specialized expertise, and a nuanced understanding of the gaming landscape are crucial, qualities that take years to cultivate and can be acquired overnight. Netflix recently faced this reality, resulting in the closure of one of its internal studios, Blue, which had been working on a multi-platform AAA title based on an original IP. We'll keep an eye on the developments, but it seems like Netflix hasn't managed to jump in the gaming train as quickly as expected.
Games rise, excitement flows, market stands as buzz grows.
I've often discussed how the release of the new titles can either boost a company's stock price or conversely bring it down if the game fails to meet analyst expectations. This time, we're seeing a positive scenario. French company Pull Up Entertainment. The company reported revenue of 200 million euro, a staggering 4 times increase compared to the same period last year. You ask me what fueled this growth. The company was the publisher behind the newly launched hit Warhammer Space Marine 2, developed by Saber, which attracted nearly 5 million players within its first month, placing it among the top 5 releases of the year. As a result of this success, Pull Up's stock price increased by 80% since the beginning of September. Pull Up even named the release of the Space Marine 2 as the most successful launch in its history. The success was further bolstered by strong critical acclaim from both the press and players, with 81% of Steam reviews rating it as very positive. Now, let's move on to another success with the newly launched game. The Polish gaming company Bloober Team recently released Silent Hill 2 Remake, which led to a 20% increase in its stock price over the past month. On the release day alone, the stock surged by 23%, though it later partially retraced. This once again shows that surprisingly, gaming releases play a crucial role in driving the stock movements of gaming companies, and you can keep an eye on this with our show. Subscribe to GDEV Pulse.
Rumors fly, stocks take a swing. Ubisoft's next move, what will it bring?
And sure, I can't skip over recent developments at Ubisoft in this episode. As a reminder, in the previous edition we covered how the company was forced to delay the release of the key titles and undertake a review of internal processes. But that is just the beginning. Ubisoft's share price increased by over 30% in early October following a media report suggesting that Tencent, together with Ubisoft founding family, might be considering a potential buyout. In response, Ubisoft stated that it regularly reviews all strategic options and will inform the market if and when appropriate. Actually, Ubisoft is no stranger to takeover rumors. Back in 2004, Electronic Arts made a move on the publisher only to be ultimately rebuffed. In 2018, another serious takeover attempt emerged, which required Tencent's help to save the Ubisoft independence. Now, Ubisoft finds itself the subject of speculation once again, but this time the deal may actually go through. Tencent, already a minority shareholder in Ubisoft, has a long-standing relationship with the company, making this acquisition natural fit for Tencent's strategy and global expansion efforts. Given the lack of new updates since then, it's possible that buyout talks are actively underway, or perhaps not. Either way, it seems we may know the truth quite soon. That's all for today. Remember to hit the like button and subscribe to stay updated on everything gaming. Catch you in the next episode.
Thanks for watching. Stay in tune. Like and sub. We'll see you soon. More news and games, all in one place. Catch you next time in this space.